The other one that actually called it also was Judith Sloan of The Australian. She's far more balanced and measured, which is exactly the way you want economists to be talking in these crises.
Yeah, I mean, the truth be known is, like I said, we've got obviously, some of our client base are ministers and senators. The big thing that's going on is that, you want to stop this.
Anthony, we are now live. I've just got the thumbs up. Sorry to cut you off. I've just got the thumbs up from our girls back at head office. So, firstly, for everybody watching, my name is David Highland. I'm the Managing Director of Highland Property Group. Very excited to introduce not only 4 friends of our group, but 4 leaders in their respective industries. And today is very much about giving our local marketplace and our consumers more information around what's happening in real estate and obviously how that relates to current lockdowns, the last 18 months, what to expect moving forward. I've got 4 incredible speakers. And with that, we've got Anthony Bell, who's obviously the CEO of Bell Partners, Roz Coffey, who is the head of culture at Macquarie Bank. Leanne Pilkington doesn't need any introduction in our space. She's the president of the REI New South Wales. And finally, I've got one of the best economists probably on the planet, Martin Lakos from Macquarie Bank as well. Thank you so much to the 4 of you for making time for us this morning. I'm certainly going to be asking you guys some direct questions, and we're going to cut straight to it. Anthony, I'm going to start with you. So, I've worked with you for the best part of a decade. You are a leader in your field, and you also manage, I think over 8,000 real estate and property related clients from what we've talked about. I'm going to ask you the first thing I want to ask you is what have you seen for the last 18 months? So I remember some of the conversations that you and I were having last February, right? And Sydney's obviously just been in lockdown the last couple of weeks. Melbourne in the last 24 hours, everything's changed for them, which is very sad considering it's the 5th time that they've been through it. What are the differences that we're seeing today versus where we were at, last February? So,
yeah, thanks, Dave, and good morning to everybody on this feed. It's a really interesting question. I think to put it, from a macro perspective, is that a lot of muscle memory was still around from GFC. We went into this second economic crisis. COVID hit. Prosperity was okay, interest rates were pretty good, but everybody moved very quickly in that sort of late March period in 2020. And I guess what we saw was exactly that. There was panic initially, there was real concerns, our unemployment rate started climbing up, and then both businesses and individuals started taking better care of themselves. There was an urgency around the elements of looking after their own personal wealth. There was worry from property markets dropping 40% in GFC for outside metropolitan areas. And so the speed that everyone moved at, Dave, was exceptional. Businesses tightened up. Like I said, there was concern as to what the future actually looked like. And I think what we actually did is we got better because of that, because of the threat. Most Australians, and particularly the ones in metropolitan areas, they kind of got better with it. They sharpened up at home in terms of what they were spending. They looked at their investments and thought, okay, cool, if my job stream or my present income stream is to dry up, what is it that they'll actually have to live on, feed the kids, pay school fees, meet mortgage repayments? And when I looked at it, in summary, by June or July, shortly after the March period of 2020, when we all went into the first lockdown, businesses and individuals got better. They started to see a bit of blue sky. Started to see some opportunities, sort of coming. And I think that was the part that actually access to those opportunities became easier. We're living in a time of the lowest interest rates in the last 100 years. Sort of who would have thought that we'd be lending money inside 2%, sort of 5 or 10 years ago. And so I guess there was a switch, Dave, into that, and property was probably the biggest player in that switch. It was a safe asset. The banks have loved it for years. Australians have been completely fascinated with the idea of owning their own home. And so the opportunities came. I suppose, too, that was evidenced. In Highland, particularly down in Cronulla, there's so many other precincts around Australia.
And just on that point, so, some of the big conversations that we were having in March 2020 were around, the way that people were reacting in the community, right? And you saw at that point, just talking about real estate and property, there was a fear that obviously the market was going to fall away very dramatically. It was all the unknowns. It was, speaking personally, and I've been in real estate for 25 years, I've seen GFCs, credit crunches, all types of things. I didn't see anything but upside after the market once we got it all bedded down and everyone sort of understood that this thing would be managed, it kind of bounced very quickly. And our numbers from July through to June 30 this year, I mean, we were 50% up in terms of our sales volumes now. And then we started to see this dramatic shift in terms of values. If you look at the current lockdown, let's just talk Sydney, Anthony, there wasn't that type of fear going into this. I think that the market as a whole is a lot more resilient to when these things happen. And you're starting to see behavioural changes in the market. So you're starting to see patterns in the way that people transact. This conversation is not only about how we run real estate businesses, but broadly around, business in general. What were some of the other things that you saw as far as opportunities through that period?
Yeah, so, and a great point as well, again, that the big part was the two leverage factors in Australian business or investment forum are usually the property market and also to the Australian stock market. There was some unbelievable opportunity that was happening again in that period, April, May, BHP dropping down to $26. So if we talk about BHP, it's probably the most widely known blue chip share in Australia. And here was the thing. People suddenly started buying stock in that again because the panic set in, and they actually looked at the NTAs of those companies and thought, wow, this is actually a good investment. So besides simply, their property value starting to head upwards, interest rates being low, affordability was good, JobKeeper pumped, hundreds of millions of dollars into the Australian economy. And that money had to go somewhere. And rather than going on spending on flights overseas, David, was going to investments. It was going into prosperity and also to elements that were going to, things got sort of dreadful. Remember, we're still seeing pictures of every country overseas. And in some ways, we still are now, sort of dealing with COVID. And we were kind of like the lucky country. I should also grab on that point you made, mate, that we didn't see a lot down there. That was because you're in Cronulla. And I can still remember that day I came down. The city was a ghost town. We were only just trickled back into the CBD, and I came down
from June last year. Yeah,
it was amazing. And I can remember walking around Cronulla with you, Dave, out the front of the office, and it was like this vibrant sunshine on the place. I actually wanted to move down there myself because obviously it was so dark up in the main Sydney area. So look,
and that's why the values have gone ballistic over the last 12 months, right?
Yeah. Look, I think so. And look, to be frank, the two catchment areas of if we talk about Sydney metropolitan areas being the Sutherland Shire, and it's also been the Northern Beaches. Now, the reason for both is it's resort style living. If you have to get in or commute into the city or go in to watch a football game, it's a 40, 45-minute trip in. It's not a real problem. But then during these COVID periods where that was all dark and locked out, it was like this vibrant property market. It was beachside, coastside. Sort of the elements there really shone through. And I don't think it's any accident that particularly the southern sector of Sydney lit up there, and everyone wanted to live there, and it was so closely held. And like I said, the complete opposite. Other property precincts around Australia that went off were Northern Beaches, as I mentioned before, Byron. Illuminated by the fact that it seems like every world actor, sort of shifted into there. So, that was popular. Areas like Noosa up in Queensland became, shot through the roof. I'm talking probably, it's up to 50% growth, sort of over that period. Stock was closely held, Dave, because parties were actually looking at their house and going, look, this is a great asset now, so we're either going to sell it and buy again straight away, which I must stress in this economic growth cycle. That is the real danger of selling in this market and not buying back in. So, sort of if X amount, was the value of the family property, selling, next steps is to get a place for a pool, an extra bedroom, an extra garage. I can't stress the importance of getting back in the market because I've got, sort of ridiculous numbers still happening with the Australian property market over probably to 2025 and beyond. And so the last thing you want to do.
Just on that point as well. So I think it's that's one of the reasons why stock's so tight, right? So nobody's listing their homes, or less people listing their homes because they can't find somewhere to buy as well. And I don't think that trend is going to change for the rest of the year. Anthony, I'm going to come back to you in a little while just regarding your predictions of the market moving forward. I'm going to hand over to Roz Coffey. Now, Roz, you've worked with our business for a number of years now, obviously through that long-term Macquarie Bank relationship that, that we cherish now. Your role, and I might get you to explain to the viewers a little bit about what you do, but as a culture-centric business, I get incredibly excited around some of your talks and obviously what you're about. So maybe that's a good starting point. What do you do at Macquarie Bank?
Oh, that's great. Thanks, Dave. And thanks very much for having me. The relationship certainly is cherished on our side as well. So thanks very much for having myself and Martin today. I have a very interesting role and a very unique role. I don't know many people who have a role like this in any companies, even around the world. So my full title is Head of People, Culture and Client Experience. So it's the all the functions in an organisation that lead to the experience we deliver to our employees, coupled with all the functions that lead to the experience we deliver to clients. And we put them together because they actually have a very symbiotic and positive relationship on each other. So the way that we think about it is, if we can do things that really engage and enable and empower our employees, that will drive their positive engagement with us. Research has shown that engaged employees deliver better experiences to clients. And the reason we care about the experience our clients have is because the way that people think about where they want to do business over the long term is based on the experience they have over a number of interactions with an organisation. So we see that as a virtuous cycle of positivity when you get it right. And you know, fingers crossed, hopefully we are.
Look, you do some amazing things in Macquarie Bank, and you've been incredibly supportive of us in the background as well. Now, how important, so it's interesting, we had 120 staff members or team members within our group going into, you know, that COVID period like last March. It happened very rapidly. I think one of the things that was interesting for me was watching your team stretch right through change, right, and how they adapt to that. How important is company culture, right, at any business level, right, particularly through times of adversity?
Yeah, absolutely. You know, we're all very familiar with that quote, and it's attributed to a number of different people, but, you know, I'll use it freely. But culture eats strategy for breakfast. And we have invested in culture because we feel it's such an important part of the way that, you know, things happen in an organisation. And to the example that you gave, where we had to, you know, like everybody, on a dime, turn around and do things very, very differently to make sure that we supported our clients and to make sure that, you know, that we talked about the difficulties of certain sectors versus others, some harder hit than others and so forth. That our team was all aligned to that goal of client wellbeing, you know, and help essentially. So we've really thought about it in terms of the behaviours that we expect of people, the symbols that show culture, the rituals, the things that we do together over time, and the stories we tell are the things making up any part of a culture. And so, yeah, it's the things, I think, when you get to a time of difficulty and a time of crisis, which, you know, we could call the last 18, 19 months, when the strength of your culture is really going to shine through, or your lack of investment in it is going to shine through as well. You're either going to have everyone, you know, rowing in the same direction with the same goals, or you're going to seeing people sort of scatter to the winds. So we think it's the glue.
Ros, it's Anthony here. I just wanted to ask on that, because we have, you know, services with Macquarie Bank and use Macquarie Bank successfully as well.
Absolutely.
I think a lot of the listeners probably be interested now, because in managing that culture, you guys have actually had people working from home a lot more than sort of coming back into the environment. I know the King Street Wharf property, the bankers that we deal with there, we've literally worked all the way from home. I reckon everyone would be really interested to see how you manage that, where suddenly the office is actually completely different, and whether or not there was benefits to be found in that, because a lot of people think, oh, everyone needs to be back together, and how you guys have managed that.
Yeah, absolutely. It's a great question. And it's interesting because it's a question, I think, as we, you know, we thought we were coming out the other side, but as we come out the other side of this one, for every business to have a think about what's going to work best for them, because different businesses will have different needs. So I think the first thing I'd say about the way of working is it's not a one size fits all solution. There's a lot of talk around the things that we've learned throughout this period of time. And I think there's a lot of myths around working that have been busted during this time. We were already very focused on flexibility, but we've now, as we think about going forward, we've put some parameters around that, or a framework for people to think about. The way that we've approached it, and this is not the same for everybody, but just to share sort of our approach, has been to empower teams to think about the best way they can serve clients, our business, their team, and then themselves, in that order. So from a priority perspective, it's our clients first. So when people are thinking about how the team should work together in a go-forward basis, then, that's, as I said, we're empowering teams to think about that within those parameters. The other thing that's been critically important, and I think we've seen a huge shift, has been the way that people use digital tools in their business. So this is a great example. Like, this type of forum in the past would have been held in person somewhere. People would have had to leave home early to get there, or, so forth. And we're all Zooming in from somewhere that's, bedrooms, offices, somewhere else, just given our lockdown in Sydney. And the rapid improvement even in organisations that have developed these digital tools. People are able to collaborate better online now. People can communicate better. We can see each other in a more reliable way. We've even had social platforms for people to interact together in a way that's, you can do quizzes, and you can do, sorts of games or things that you'd have to get together to socialise with people in person. There's now virtual ways to do that. Now, I think as human beings, or we sort of know we're social creatures, and probably this is not therefore we're all going to do this all the time. But I think it just opens up the door to a number of options. So for some businesses where you are needing to be in person, being remote or being virtual or being hybrid might not be as much of an option. For some businesses, there'll be a blend, and for others, and for certain roles in different organisations, it might be possible to be not in an office for much of the time. But again, I would stress that's a conversation for the needs of each business in terms of its own culture and the needs of its clients. And the last thing I'd finish with is, we sort of started with culture. That's been something we've worked hardest at to try and maintain throughout this virtual or this remote distributed team. And it's something that I think our people say they do miss, coming back together in person for those cultural moments that matter. So they're the things we've talked about.
Well, I think, beautifully said. And the big thing that I've probably noticed with Macquarie Bank over the 15 plus years that we've worked together is that you guys are very much embedded in terms of those relationships with your clients. So I remember at the start of COVID, I think the number was you had like 3,000 people working remotely, overnight. And, I just remember some of those conversations I was having with our relationship managers and you guys through that period. And I think you did an amazing job. The last thing I just want to ask you, and the sake of maybe just going over some of those key points, is just at a business level, what's the key? Everybody responds to this virus, to COVID, differently, right? So we saw that some people in our business were more concerned about the actual virus itself than others. How did you manage those sort of issues?
That's a really great question, because again, the need for almost personalization in the approach, and the knowledge that everyone is responding to these situations very differently, and everyone's life situation is different, is I think really, really important to note as well. We had an approach where our employees' well-being was the number one priority, as in from the way that we worked, essentially. And what that meant was communicating often and clearly, and being really clear about what we did and what we didn't know, so that we built trust in our employees. In a time of great uncertainty, you really want to remove as much of that uncertainty as possible. So even if it's to say, we don't know this, but we'll know it tomorrow and we'll tell you tomorrow, that creates some semblance of certainty in what's become a very uncertain world. We also had a lot of focus on people's unique situations. So things like understanding who was at home on their own, who was at home having to homeschool at the same time, who was at home in a shared house with 3 flatmates all trying to work around the kitchen table at the same time. What are all those unique scenarios? And who's at home with a home office and absolutely loving it, you know? So just really understanding, people's unique circumstances, and then empowering our leaders all the way down to sort of the team leader level to, you know, we're constantly prompting them, like, check in with your people, see how they're going. When you're calling them to talk about work, don't just talk about work, you know, make sure people have gone outside for a walk if they're allowed to do that, or, you know, those sorts of things. So the well-being factor was a very, very big, continues to be a big focus. And the communications piece, that sort of trying to provide as much certainty in an uncertain environment, just so everybody can park a whole lot of fears and just kind of focus on you know, what they need to be able to do.
Well said. Sorry,
David, I was just going to jump in there, if I may, just very briefly with Ros. I'm a 27-year veteran at Macquarie. I'm now an old man in Macquarie, believe it or not. But what Ros has said is absolutely totally reflective of how the organisation is. We've developed this culture over time for a number of reasons, and as a result of which, we are always crisis ready. We don't predict crisis, and we're not setting the business up waiting for a crisis, but everything that Ros has said is all about having this culture whereby we can work together, and as it happens, we've been able to also work remotely. I think for small business, unlike Macquarie, they often get so caught up in working in the business rather than working on the business. And working on the business is all around creating things like your own very special culture that Ros has articulated. And that communication piece is so, so important. So it doesn't matter whether you're a business the size of Macquarie or a small sole trading business with a few employees, you know, taking a step back every now and then and thinking about how is this business positioned for good times and for bad times is absolutely critical. Because to be quite honest with you, COVID's been terrible for everyone, but it's actually been a seamless work experience for us at Macquarie.
And you can tell that, particularly as one of your clients. And thank you, Ros. I very much love talking about your space. And off the back of that, Leanne Pilkington. So Leanne, like I mentioned before, is the president of the REI New South Wales, but also the CEO of the Lang & Simmons Network, an industry veteran. You and I have been friends for a number of years now. Very grateful for your time this morning. What are you seeing at the moment, just broadly at an industry level?
Well, you touched on it earlier around the listing numbers, and actually CoreLogic delivered a report this morning, which was well timed. Across the country, there's 139,000 listings across the country. Now, the 5-year average is just over 200,000. So that tells you we are in a really low level of stock. And what's been really interesting is how quickly agents did pivot to be able to sell online. So auctions, I know the first weekend, the government came out on the Thursday and said all auctions will be online as of Saturday. And I was having agents freaking out because they hadn't been using Zoom and how are we going to do this? And I remember watching the very first one of one of my team members, and I could see kind of this much of the auctioneer, couldn't see his head. They hadn't had the cameras placed properly and all that sort of stuff. But the property sold, they got themselves sorted out. And our auction clearance rates have been remarkably strong. I mean, just last weekend in lockdown, the preliminary clearance rate was 76.5%.
That's really important data. And
right.
I think that point, it echoes with what we saw. So when exactly that moment last year when it was like, okay, everything's online. Nobody had run an online auction before. And I'm the first one to admit, like we run up to 50 auctions a month at a group level. We couldn't make them work when it first happened. In fact, we sort of just went, oh, this isn't for us. At the current lockdown, we've got 100% clearance rate online. So getting back to the first point, it's like the market's kind of got used to this is the new way of doing things. You're not seeing scarcity. Like we had an auction two days ago online. We had 22 registrations. It sold for $500,000 over reserve. I mean, this is the new world that we live in.
Yeah, it absolutely is. And it's great to see, you know, our real estate agents have been a bit slow to take on board technology, but it's great to see that they're actually making progress. And I think we also need to acknowledge here in Sydney that we are very lucky, because real estate, one of the reasons for leaving home in Sydney is that you can look at real estate to buy or to rent. Now, that is not the situation that they've got in Melbourne. It's not the situation. If you were in WA last year, you couldn't even settle on a property. You couldn't move in, right?
Oh, sorry. So on that, so you could settle, but you couldn't move in some cases, correct?
Yeah, that's right. Yeah.
So, I mean, and that, imagine just running your settle. I don't even understand how you'd make that work. And I know that's
chaos.
Well, it's just managing tenants. People would have already made commitments on properties. It would have been chaos for their market.
And we're just so grateful. We at the Real Estate Institute worked very hard with government to help them to understand the impact that we would have had. We would have been making some people homeless in the middle of a pandemic if we couldn't let people move in and out of their rentals or the properties that they've bought and sold. So we're very, very lucky in Sydney, and our agents are all supporting. So at the moment we can show property, but only with one person at a time, as you would know. So things are still going along.
Let's just explain that to everybody watching. We can still show property, and we still are showing property.
Yeah, right? But we can't do open for,
Exactly. So in some cases, we're running open for inspections tomorrow that we could usually show 30 people through it in 30 minutes. We're showing the same 30 people through, but we've got to show the husband and the wife separately.
Yeah.
I mean, it's taking about 5 hours to get the same outcome.
Yeah.
We can still show property, correct?
Yeah, correct. Yeah, it's it is really time consuming, but it's better than not being able to transact at all. And the other thing that's really interesting is that it's just because transaction numbers will slow down, right, during a lockdown period, because some home owners will think, oh, you know what, I'll just wait until we can do open homes again. So instead of putting the house on the market today, I might wait for another few weeks. So that will happen with some people. But it's not like that demand goes away. And so we in the real estate industry know that once lockdown is over, we are going to be flat out again. So we are going
there'll be
to
more
see
stock on the market as well at that point. There'll be more competition. Yeah. It'll
Absolutely.
sort of, I mean, we envisage going to open the floodgates in terms of the way that we can do things.
Well, even the last financial year, right, there were 583,000 transactions around the country. Now, that was the highest volume since 2004. And that's off the back of really low levels of stock. So no wonder prices are going through the roof.
Oh, you couldn't be more spot on. I think so if you're, and we've got lots of potential buyers, but let's talk to those potential sellers, right? Yep. Now, our business, we've got 3 offices that are they're all working, most of them are working sort of remotely or on sort of rostering split days, that type of thing, obviously, just to adhere by the guidelines. But our sales team, they're really dialing it up at the moment, right? So I know, because I'm talking to them every day, they're out there really trying to push harder, and the results are sort of speaking to themselves. We've sold 55 properties in the last 15 days through these lockdowns. What's the advice that you can give, right, as an authority in our industry to those sellers if they're considering it at the moment?
Yeah, so your point about more stock coming on the market at the end of lockdown, I think, is a really valid one. And what sellers need to appreciate is the more stock that's on in competition to your property, the more choice that buyers have. So I would be taking the advice of the agent that is working in my local area. Have those conversations. What is coming up in competition to your property? If you were going to go to market this week, what would that look like? How would the campaign actually happen? How would it all work? And then make your decisions based on that information rather than on what you're reading in the media or what your next door neighbour says.
I'm glad you raised the media. If anyone was watching the news or even 60 Minutes last Sunday night, I mean, I've just tuned out of Channel 9 and Channel 7.
Yeah.
It's brain damage at the moment. And I think it's a negative sentiment that I just don't think helps anybody. Martin, so thank you very much, Leanne. I'll probably come back to you in a minute. Martin, so give us a snapshot, give everybody a snapshot, right? Macro, micro, let's just talk from last February onwards. What does it look like? And then obviously I want yours and Anthony's predictions, obviously moving forward.
So, and thanks again for having both Ros and I on today. Look, from a macro perspective, I guess, again, the difference between this economic crisis and the GFC was the GFC was generated by over-leveraged businesses and households. This is obviously a health pandemic that's created this shutdown. I think Anthony touched on it absolutely spot on, that the very quick response by governments around the world and our own and central banks really rescued the situation. To put that in comparison on the GFC, basically the amount of stimulus action has taken place to compare to the GFC is over double than what we saw at the time of the GFC. That's both the impact of what the central banks around the world have done by cutting interest rates and adding liquidity into the marketplace, into the economies, and what governments have done on the fiscal side, the spending side. Initially, obviously, saving jobs, saving households, making sure there are cash flows into businesses. Now we're now a reasonable way down the track. And in fact, the recovery on a global scale is exceeding expectations on every data point. When we look at the data, for example, on manufacturing or industrial production, or even recovery in services activity, we are now at levels above that on a pre-COVID basis. In other words, the world is running harder and faster than it was in 2019. Now, this is to some extent a rebound impact from being in a very negative situation. But we're forecasting global growth to be about 5% this year. It'll probably ease back into 22 towards 3.5 or 4. And that's still a lot above the long-term average. And the reason for that is still that these stimulus packages are going to remain with us, albeit they're evolving as well. Obviously, we know here in Australia, for example, we haven't got JobKeeper, but the government is basically supporting businesses through apprenticeship packages. They're supporting the home building side through a home builder package. Now, these aren't going to last forever, but they are there to support the economy, to get us back on track to where we were before. So that's the big picture view and sounds pretty positive, and it is. But clearly there are still very big risks in front of us. And we're experiencing that right here today. The potential of additional COVID flare-ups, the mutant strains differing what they were doing 12 months ago from COVID. And of course, to some extent, we've been a victim of our own success here in Australia. And I think that Anthony was sort of touching on this. We've been incredibly complacent, and it's now biting us on the bum, if I'm allowed to say that. Largely because we found that we've handled the crisis so well from a health perspective and a business and household perspective that we haven't been alert to the possible risks of what we're experiencing today. So I'm personally hoping that this is a wake-up call for everyone to be thinking about the risks that can be still with us in 12 or 24 months' time from a COVID perspective. We need to be getting the vaccinations rolled out. We need businesses and households still to be vigilant on the economic or the household balance sheet side. There's no doubt about that. And then we'll get through this a lot better. Boris Johnson is opening up the UK economy next week. That's despite now having 45,000 cases a day. And the reason why he's opening up is they believe they've broken the nexus between cases and deaths. And that break is key and critical. Now, thank God we haven't had a round of significant deaths. I think it's only 2 so far recorded on this next outbreak. But that's the sort of thing we need to do. And so that vaccination piece, I think, is really, really important because it has a whole range of positive impacts around confidence for consumers and households and businesses, that they can get back to more of a normal daily routine. And we'll just have to learn to live that COVID as a disease is going to be with us, but it's just not going to be as life-threatening as had been before. Where do we go to from here on the stimulus side? Well, certainly, it's key on real estate and other growth assets such as share markets, what interest rates are doing. And certainly, we shouldn't be having any doubts. And I know you've commented about the media and various commentators, but we shouldn't be having any doubts about what the Reserve Bank is saying. And the Reserve Bank is being really, really clear. They are forecasting at this point in time that the conditions that they see going forward are going to basically meet their policy around interest rates. We'll have interest rates on hold through 2024. Now, that's not set in concrete by any stretch of the imagination, because those conditions can change. And the conditions we're talking about really is around inflation. And if the central banks around the world start getting concerned about inflation, and that's driven not only by commodity prices and activity, but it's definitely driven by wages growth. And that's the missing piece of the inflation puzzle at the moment, right around the world. We are not seeing wages growth in broad terms. Yes, some professional services are seeing some pressures on wages, no question about that. But in broad terms, that's not happening. So inflation in our mind, or our view at the moment, is not a threat yet, but it may well be. And so central banks will reserve the right to change their policy settings should inflation start to emerge as more sustainably high. At this point in time, the Reserve Bank is saying, we don't think that's going to happen. Inflation at the moment is somewhat transitory on the rebound of the economy, and they are looking to keep rates on hold for a lot longer. In other words, they don't want to disturb the recovery.
And I'm going to ask Anthony the same question as well, but what's your prediction on, say, house values?
Okay, so look, the biggest issue that always affects house values when we see binding elements that are double-digit growth. Sort of in actual quarters, Dave, is that the element that people go to straight away is they talk about a bubble. Okay, the bubble must come to a burst. We've seen it in tech wrecks, we've seen it in property markets bursting before. All of our vision and view on it and analytics is suggesting that there is no real bubble here because the spending on new property is not irrational. It's actually quite rational. Household incomes haven't dropped as was possibly predicted. In fact, some household incomes have actually improved and increased. The cost of money is so cheap. So an extra $1 million a year to put the family in a better home isn't an extra $1 million anymore. It's $19,000 or $18,000 in interest cost. So when I look at it, my view is that the trajectory of improvement in value in the Australian property market, until I can be convinced otherwise, is set to increase. It's set to improve probably right up until 2025. The fact is,
you're not going to see this big crash after sort of COVID's bedded down. It's probably the question.
Look. If anything, it won't be a crash, do you know what I mean? But it will cyclerize back to, a set where, so that there'll be a plateau in the Australian property market. Look, I should elevate that there is some risk as to that happening. The highest risk is that happening, would you believe, is actually a war with China. Now, it's unspeakable and unthinkable for, I'm sure most of the people that are on this Zoom conference to actually contemplate that there could be a war with China. But when you dive deep into it, sort of the issue is that China and Taiwan, have been in a cantankerous relationship for some time. If Taiwan does declare war on China, the US under the ANZUS Treaty has to come in, and then Australia has to come in, and then all of a sudden, 33% of our GDP, which is mining sales into China, stop that day, and that will cause, obviously, a harsh economic reality to Australia. Now, it's far be it from me to actually, pick a number, but when I read the analysts and the economists, they've got a relatively high degree of possibility there, and obviously, hopefully, common sense prevails and that's avoided. But taking out that alone, there is no actual roadblocks or humps or anything in the future of the Australian economy to suggest that it's a solid place to invest. It's a happy place to invest, Dave, because the truth is, people feel comfortable in their own home. They feel comfortable about reading that property prices are improving, in their local area. That brings, a sense of well-being to the household. And then what it also does is know that the biggest asset that most of the people in Australia are ever going to own, which is their family home, is still, sort of growing in value. So, I'm optimistically buoyant into the future, but I do caveat, the very well point that was made by Martin. There's inflationary pressures. And like I said again, internal bank mechanisms that might start pushing interest rates, sort of in an upward direction, may actually slow down, the spending that's on here. But sort of forcing that. We've got to remember, guys, too, that we're in such a great economic time right now. I think Martin will put that the Australian property market last surge like this, actually, I don't think it was Martin or possibly Leanne, 2004, Leanne, was it?
That's right, 2004.
Now, let's go back to what 2004 looked like. The Olympics had just been on in Australia. The Liberal government, sort of was managing interest rates in a downward direction. We were single-digit interest rates by 2004. There was excitement. But let's remember this. In that period, interest rates were still 6.5% or 7% in 2004. They're a third of that now. Okay, in real cost to households. So that means that the logic of people spending money on their home is not illogical. I'd say this to all of the people on this feed is keep an eye on liquidity as well. I mean, it will become important at a certain stage. I mean, over every 7-year cycle. So investment shouldn't just be hard in property. I mean, different characteristics, different family, different cycles, of whether mum and dad are both working or young families are starting. Liquidity is also the savior, do you know what I mean, of any period of a little bit of crisis or a little bit of risk. I mean, having cash that can be accessed is still an important part. So,
very good point. I think a lot of business owners would have learned some lessons through last year going into that period that, as Roz summed up, it sort of turned on a dime very quickly. Before we sort of come to a close, I'm going to ask Roz about her key piece of advice for any business owners in a minute. But Martin first, your prediction. So we've just started the new financial year. What is your prediction for the market the next 12 months?
So the conditions for growth assets, such as property and shares, still remains intact and is very, very good. So we're very positive about growth assets for the end of this year. So we're certainly forecasting the share market to be higher by the end of this year. And given the conditions that have been discussed this morning, you'd have to say that you would gauge property prices are going to be higher as well. And I think a lot of what Anthony has said certainly holds true. I certainly feel that prices having run so hard, they don't run high forever, and we've got to go through probably a period of consolidation. I don't know when that's going to be, whether in fact it's just going to be buyer fatigue because prices have run up, or a number of buyers have now been priced out of the market. I think probably the biggest component will be that when we start to see cooling is that when the marketplace does start to gauge that interest rates are set to go up. Now, we are seeing some mortgage rates going up a little bit in the marketplace. That's not reflective of the cash rate. That's reflective of the fact that banks are now finding their funding costs are starting to rise, and they're going to pass those funding costs on to borrowers. But we're not talking about significant rises here. Certainly nothing that would put paid to stopping the market in its current trajectory. The other component, David, that I think we haven't touched on is that eventually this economy and our country is going to open up again. Eventually the international borders will be open. It might be another year away, but it will happen. And then you've got another element in regards to supporting property prices or the pretty significant oversupply that we've had in apartments in Southeast Australia pre-COVID. That oversupply will slowly but surely get absorbed by immigration when it reopens.
And
now,
to
that's
that
a little
point,
way off.
Martin, you can see if you have a look at the data provided by the portals, Domain and realestate.com.au, they have seen incredible increases in the number of people looking at property in Australia from places like the US, Singapore. It's been
they want to come back. Yeah,
absolutely.
Hey,
absolutely.
Guys,
and to that end, it's the top end of the market as well has seen a higher increase in price than the middle and lower.
You're absolutely right. The prestige market's gone.
David, it is difficult to see. Certainly there's no bubble in this respect, and certainly there's no crash coming. It's difficult to see prices not advancing from here for the rest of this year. But again, putting my cautious hat on, it's not going to continue forever. So I think we've also got to be cognizant of that. If I can just add one last thing, and I'll hand over to Roz, is that through the last 12 months, when we look at total debt levels around the world, so we're talking about government debt and household debt, again, Australia is, again, in one of the strongest positions. Yes, our government debt is almost doubling, but given low interest rates, the service cost of that is actually less than what it was pre-COVID. And more interestingly is households actually saved more money. So household savings ratio actually has gone up. So to Anthony's point, households are actually, in general terms, households are actually in a better financial shape than they were pre-COVID.
Absolutely. Anthony, before I hand to Roz, you had one last point?
Yeah, I just wanted to say too, like I said again, the good alignment here, Dave. that part that if we do flatten out and it suddenly property starts to come off in that 24, 25 period, watch out and keep a strong eye for the federal government's skilled migration policy. I mean, that will inject steroids into the Australian economy, meaning skilled migration, doctors, scientists, engineers coming out from other countries and bringing their whole families to Australia. That will put upward pressure as well. We've got $1 trillion in debt to pay for it, and I reckon it's a pretty hot tip that the feds are working out how they're going to pay it, and it's going to be by making Australia one of the most attractive foreign investment review board countries in the world, and allowing skilled people to come into Australia to improve it. It's not the worst thing. Property markets go up, more people coming in to generate income, which means taxes could possibly drop again as well. So we've got Captain Optimism over here, Dave. I mean,
I'm right behind you for the next 12 months. I can only see good things happening certainly in the real estate market. Right, as we close, broadly for any business owners that are obviously tuning in, what's your last piece of advice for those managers or principals or business owners?
I think in good times and in bad, the things that help ensure a business thrives are people, whether those people are the people who work for you or the people who work with you as clients. And so, in the same way that Martin said, this too shall pass, it feels very overwhelming at the moment. It feels like all encompassing, and that all we've talked about for the last 19, 20 months is COVID. There will be a time when we don't talk about that. So I think the advice is really thinking about what that future looks like, the things you can do now to ensure that you're taking care of the people who work for you and the clients who work with you, such that when this passes and when we open up again, that your business is in as strong a position as it possibly can be to take advantage of those market conditions at the time. And most of that, or a really strong part of that, is, well, two things. One, their well-being and their needs, and two is certainty and clarity for them in a time of great uncertainty.
Oh, look, I think you sum that up perfectly. I think you focus on your people, and obviously just at a leadership level, I think everybody at a business level needs to be transparent with their people as well, and inclusive in terms of their management style. Mm-hmm. A big thank you to Leanne, Martin, Roz and Anthony. Incredibly great conversation and some really good information that came out of that. For anyone viewing this session, thank you for being a part of our real estate conversation. If there was any information that you needed out of today, I'd be happy to connect you with one of our 4 panel members. Of course, my email address is david@highlandproperty.com.au. Thank you. Stay safe and enjoy your weekend.
Thanks, guys. Thanks very much, Dave.
Thank you.
Thank you.
Thank you.